My name is Matt Miller. I'm the founder and CEO of Embroker. I'm also the last speaker before lunch, so I have that going for me. But for those of you unfamiliar, Embroker is a technology-driven commercial insurance brokerage. We're essentially building an operating system for risk management. And so by that, I mean that much like an operating system for a computer allows users to do things in a much more simple manner than the underlying code does, our software and platform allows business owners and CFOs to more accurately and easily assess their risk management needs. But I think rather than pitching you my company, which I have to do a lot, I'd like to take a step back and talk about some of the higher level trends that I see that led me to start Embroker. So in my previous life, I worked for the private equity firm Hellman and Friedman, and in that capacity, I sat on the board of directors of one of the largest commercial insurance brokers in the world and the largest provider of software to the brokerage industry. And so I had perhaps a unique insight into the intersection of insurance, software, and institutional capital. So taking a step back and looking at what have been the largest trends in insurance just recently over the last 5 years. So there's been one big one, which is that alternative capital has flooded into the reinsurance markets to the tune of about $70 billion and now comprises over 12% of reinsurer capital. But I was really fascinated about what impact this had on the underlying markets themselves. And the short answer is that basically none. Other than smoothing hedge fund volatility and squeezing reinsurer profits, it's had zero impact on the underlying markets. And when you look at even property catastrophe, which is where the money is all gone, and you look at losses, both insured and uninsured, what you see is basically an underinsurance gap. You have a widening percentage of our global economy being lost to uninsured property cat losses alone. 20 basis points of our entire economy is lost every year. And when you look at this conundrum, you have basically this huge unprecedented excess of capital, and you have avoidable yet increasing losses to our economy and society from potentially insurable assets. So, what's driving this disconnect? I spent some time thinking about it, and I think there's really three things. One, a broken distribution system. Two, a lack of digital innovation overall in the industry. And three, insurance as a product is becoming less relevant to the next generation of buyers. And I'll run through these quickly. I think these are trends that most people here are familiar with. But I'll start with distribution. And we focus on commercial insurance, and so this is specific to that. But when you think about independent agents and their role in commercial insurance, they play a vital role as a market maker. Risk pricing is heterogeneous, and there's a lot of counterparties. So if you're dealing directly with one of those counterparties rather than through a market maker, you're probably getting screwed. It's the reason why we've had brokers and intermediaries for hundreds of years. But the problem with them as market makers go is that they're extraordinarily inefficient, they're expensive, and they don't do very much. And so, this slide shows the services provided other than shopping by agents, and the runaway answer was none. Digital innovation is a similar story. I think this is familiar to everyone that's used a commercial insurance product, but they're terrible in terms of the digital products. These are the NPS scores of digital offerings across use cases. And I think this probably even understates the problem, because in order to have an NPS score, you actually need to have a digital product, and so that would disqualify a large portion of the industry. And then lastly, as a result, insurance, and this is people here are also probably familiar with, but it's just losing relevance. And so engagement with insurance is highly correlated with age, and younger people are less engaged. But what was interesting to me is this box on the right, which is that 25% of people said that they would actually buy more insurance if they understood their coverage better, and so that there was an education gap as well. What occurred to me is that all of these are basically the same problem, and that they have the same solution. And that solution is the creation of a technology product that would modernize distribution, which would engage and educate new buyers, and have the ability to both eliminate data latency, collect data at scale, and that the combination of these is what would fix this problem of capital allocation that we have writ large in our economy, and specifically in insurance. But what got me excited enough to actually quit my job and go pursue this is the impact that this has on the potential of insurance overall. So when you think about the current value chain, which is extraordinarily inefficient, complicated, and expensive, when you can replace this with a technology product, you can move to something that's more of a liquid market for risk that matches buyers and sellers. And just as importantly, when you think about the impact this has on the workflows of insurance, you move from a world of pen and paper applications to a world that's more real-time in nature, based on risk indicators and usage, to a world of pricing that's set once per year based on actuarial tables and individual judgment, to more of an algorithmic pricing mechanism, and a world that has extreme amount of data latency to a world in which there's essentially none. But I think the most important realization is that this is made not by eliminating intermediaries, but by using technology to build a much, much better one. And I want to close by, I'll share an anecdote that's just a recent one for me, which was that yesterday I was in Chicago for McKinsey's conference with insurance carrier CEOs, and given my business, they asked me a lot, all right, so what are we doing on digital innovation? Are we doing the right thing? And the key thing that came out of it was that they were thinking about it as if it was a project. Like we could do the digital innovation, then it would be done, all right, on to the next thing. The point that I wanted to take away with is like digital innovation, it's not just Facebook ads and it's not just buying insurance online. It's the future of our entire economy, and it will touch and change literally everything. And at Embroker, we're building the insurance brokerage that will allow insurance to remain relevant in the new economy. Thank you.
Thanks, Matt.